Right now, gold and silver are rising. Does this mean that the US dollar has lost its status as the safe haven of the world? Well, we'll break that down here today. The first thing I want to look at is gold. I'll give you the information you need to know, including the current prices and what's been happening, why it's rising. The second thing is stocks, because that's the other end of the spectrum that we must look at. And the third thing is other assets. I'll show you what's happening with the US dollar. We'll look at some others. A lot to cover here. You're going to be well informed. Just stick with me. Let's begin. Gold surges to 6-month high and analysts expect records in 2023. So this has been going on since November. We've seen it rising. And why has this been the case? Well, if you look at it a little while ago, we had inflation of all kinds for the last few years. You look at the expansion of the currency supply, you can see it in the prices that you pay at the store, and yet gold hasn't really performed as well as many had expected. There were times in which some had said, gold is done, it's a barbarous relic, and yet it still stands. Well, I'm going to show you what's happening here in this case. We're looking at the price as I record this video, 1845 for gold and 24 for silver. These have done very well, as I have said. Basically, since the fourth quarter of last year, they've been rising. Now, they've been fluctuating within this range for a long time. We need to see better performance. How do we see that? Well, in time, what happens is as more currency is pumped into the system, the faith in that currency is lost and it's reduced. And so you have assets that are higher in their nominal value. So gold is priced at a certain level, 1845, but really it's priced in 1,845 US dollars. If we expand the total supply, it's diluting the whole entire supply, and therefore you are getting yourself with lower value per dollar. It's such an odd concept, but you have let's say a $1 bill or a $100 bill, it's not necessarily carrying $100 of value permanently. That actually declines. It's so counterintuitive when you think about it, but that's the way it works in this infinite money world we live in. Look here, you could see that gold prices kick off 2023 by settling at the highest since mid-June. I think it's important to note that we are always going to see these numbers in flux, but we generally want to have our assets held in a place where they would maintain value, because we don't want to lose money during these times. That's the whole thing. When there's a recession, when there's tough time, you want to have something that just doesn't lose money. It doesn't need to make money. Sometimes we just got to try and not lose. And this is something I wanted to show as well, because many people get caught up in the stocks. In fact, quick little story, when I started to get into gold and silver investing, I went to the bank. That's where my money was. And I said, look, I'm looking for precious metals. I'm looking for physical metals. And the lady said, I'm sorry, we don't have that. I said, I'm sure you do. I think you can. You can get some precious metals and order them and so on. And I literally couldn't get it. I spoke to the financial planner. He said, well, we have stocks that you can get into. If you'd like that, we can get some gold stocks. I said, no, I actually want physical precious metals. And they couldn't do it for me. So what do you think I did next? Well, I took the money and I ran, because they couldn't provide me what I needed. So the bank, by the way, that bank did not stop me from taking my money out, which is interesting. Although they did ask 20 questions. This is Barrick Gold. So when we're talking about miners, this is a totally different ball game than what you would see with the actual physical precious metal. If you believe in the precious metal, you buy physical precious metals. You don't buy stocks. Doesn't matter if they're miners. Doesn't matter if they're an ETF. You've got to buy the physical metal. That's the only way you're getting gold or silver. If you want the miners, they have this sort of leverage effect. And when they're pumping up more and more of it, it's going to be beneficial, really beneficial for the holders of these stocks. But when they're not performing well, or when the general sentiment, like recessionary time frame, comes into play, that actually could negatively impact the stock a lot. So even if the metal performs well, you might get quite a disparity with this in this case. So watch out, okay? Be very careful about that. And this is just something about silver. Crushing, extracting, and refining. Once the ore has been mined, it goes through an extensive process to extract the silver. Silver is primarily found in ore alongside other metals like copper, lead, zinc, and gold, with the process varying depending on the silver ore's composition. So I just wanted to show you that because when you're mining, in this case here, silver, you're not just mining silver. And so this is a very labor-intensive and capital-intensive business. So these things take a long time to come online. If suddenly it wasn't very attractive to pull that out of the ground, they're not going to do it. Mines are going to close down, less individuals are going to work on it, you have less supply, and that can push up the price longer term. So be aware of that with any sort of commodity. What it takes to move out of the ground, what it takes to refine it and process it will always impact the price. You got to remember that as an investor. One of the biggest factors here is that the central banks have been buying gold at the fastest pace in 55 years. China and Russia being big buyers. So we got to know, where is the demand coming from? And this is just showing you one thing. The central banks, who have a ability to print as much money as they want, they're buying it up. It's important to diversify your investments because it can help spread risk. If you only have investments in one asset class and that asset class performs poorly, your portfolio will suffer. On the other hand, if you have a diverse range of investments, a poor performance by one asset class may be offset by the good performance of another, which can help protect your portfolio. Inflation can also be a concern for investors. As the cost of goods and services increases over time, the purchasing power of your money can decline. This can eat into your investment returns if they are not keeping pace with inflation. Diversifying your investments can help to hedge against this risk by including assets that may perform well in an inflationary environment. Gold, cash flow producing real estate, and land are all assets that have the potential to perform well in an inflationary environment. Gold has traditionally been seen as a hedge against inflation, as its price tends to rise when the cost of goods and services is increasing. Real estate and land can also benefit from inflation, as the value of these assets can increase along with the cost of living. This all is, really in tandem with what happens with the central banks, their activities, and of course, so much that we need to look at on a daily basis, but this is the general breakdown. Stocks usually go up. Just make sure to give it 20 years. This is what they're telling you. So you got the hard asset, real asset side, and then you look at the paper asset side, and this is literally what they're saying. I'll read that again. Stocks usually go up. Just make sure to give it 20 years. And in this article here, they make the case why if you simply hold on for 20 years, it usually ends up being positive. There's been no 20-year period where things have stayed down. Now, I could talk about that all day. I think it's hilarious. This is the chart if you want to check it out, going way, way back, 1947. And yeah, sure, 20 years. How many companies actually are able to stand for 20 years and go back? So if it peaked out 20 years later, they were worth the same or greater. There aren't that many companies, okay? There are some examples, Microsoft being one of them, but you don't find that too often. And the whole point here is that we need to be diversified in where we hold our investments. Yeah, you can have risky stocks, but you don't want to have everything you do in risky stocks, because suddenly you have a downturn that lasts a long period of time. You may not survive it. You may need to retire. You may have a health problem. A family member needs your help, and you literally cannot afford to do what you hoped to do. This is some examples here. Apple and Amazon lost a staggering $800 billion in their market cap in 2022. I wanted to show you this, and they give you some charts. But just looking at this, comparing what has happened, and these are stocks that people have said there is no chance that they will go down. And yet they did, and lost, if it continues a little bit more, we're talking about $1 trillion just shed off of a couple companies. So unbelievable. When you look at that, Apple's market cap falls under $2 trillion. Previously, if you remember, as they say here, a year ago, Apple's shares briefly rallied to climb above $3 trillion in market value as the S&P 500 hit a record high. So when everything's great and everything's fine, Apple's so attractive. Then you lose $1 trillion in your market value, suddenly people aren't so happy. One of the stocks that has been beaten down as well has been Tesla. The stock had done so well, but things have turned around and nobody seems to want to point to the obvious scenario that when you increase interest rates, you cause problems with stocks. Simple matter of fact, yeah, you can point to the deliveries didn't hit the estimates we had. It's not that. Oh, Elon Musk is spending too much time at Twitter. Are we not going to acknowledge the Fed? Like, is the Fed just hiding in the shadows? Maybe they are. Here we have it. Looking at Google and Meta's advertising dominance fades as TikTok and streamers emerge. These are two big companies that make a lot of their revenue from their advertisings, and things have changed recently. So watch all of these big names as times really turn over. Let me show you really quickly. The US dollar surrendered its status as the world's premier safe haven in Q4. Now, I just want to show you the fact that when you look at the US dollar, I mean, just compare it to where it's been basically kind of since, gold has been rising. Over that same period of time, we have watched the US dollar, measured by the US dollar index, declining. That's important. We've also looked at what countries like China, for instance, have been doing. They've been selling off their US dollar assets ever since, and actually many years before that, 2016. So we can see that things are changing. It's always going to be in flux, as I say, but watch it closely. You can also look at treasuries posting their biggest annual loss ever as inflation takes its toll. I wanted to highlight the fact that gold versus bonds, okay? Gold versus bonds. You're going to look for, if you're an investor in one of these big companies, you're going to look for safe havens. You want to make sure that you can maintain your level, okay? So you got the risk out there, but you also want some level of, significant, when you have inflation, when you have recession, when you have worries, you want something that's secure and safe. And so what happens? Well, it might be gold, but when bonds become worth more, you can see what they're doing. They're attractive to the investors because they say, well, hey, I can make 4% or I can make nothing on gold because they're not going to make that return over that period of time. So that's what occurs. And then suddenly when bonds become worth less, they start selling them off and they buy gold instead because it's always going to be that safe haven. That's an investor mindset, okay? Then we have this, home prices increases weakened sharply in November, posting the smallest annual gain in 2 years. That's when you break it down at a national level in the US. If you look at many places though, they have actually declined. So their prices have come off the highs, a lot of inventory building up, a lot of things. When I talk about real estate, I am as an investment, as an asset, I am talking about specifically cash flow producing property because the price can come down, but you can still get your check each and every month. That's the whole point. I hope I made myself clear about what's happening with gold, what's happening with other assets. This was a full breakdown. I hope you appreciated it. Every single day I'm going to bring you the news. All you got to do is hit that subscribe button down below. It's right next to the like button. Come back tomorrow and I'll show you some other stuff you're definitely going to want to watch. See you tomorrow.